welcome along to the Property Academy podcast by Opus Partners. I'm your host, Sid Knight. And today on the show, we're talking about this property market downturn versus the last one we had in 2008, because I think if we look closely at what happened in 2008 and compare it with what's happening in our current property market downturn, we'll learn a few things. Now, here's the thing. The last downturn and this downturn, they're not going to be exactly the same, but what lessons can we learn about how long property prices are going to be down for in 2022, 2023, and also how quickly will they recover as well?
So, Ed, let's kick it off. How deep did each downturn go?
Well, if we look at the 2008 house price downturn, and for you guys watching on YouTube, you can see this. For you guys listening on the podcast, I'll explain it to you. You can see that house prices peaked in June 2007, and then they went to their lowest point in December 2008, and it was a 10.8% decrease. Now, if we compare that to our current one, and remember, we're not right the way through it, we're still in amongst it, but we've seen about a 12.5% decline so far. And we expect here at Opus Partners, we're going to hit about somewhere between 14 to 15% decline, maybe up to 15.5. Others are predicting up to about 19%. So it looks like that this downturn could be almost twice as sharp in terms of how far house prices are declining compared to the last one. So we might be twice as deep maximum, but it'll be 1.5 to maybe twice as deep.
And how long did they last?
Okay, so this is the interesting thing. Let's come back to the 2008 numbers. Now, what's interesting here, Andrew, is see how prices peaked in June 2007. But there's something that's really interesting.
It's flat.
It was flat. Property prices flatlined for about 6 months, 8 months actually, from June to February, before they started to fall away. Now, technically, if you look at the point where house prices were most expensive to when they were cheapest, it's
also known as the peak.
Yeah, it's 18 months. Yeah, you shut your smart mouth, thanks. Can we put that in? Are we going to leave that in?
Yeah.
It's 18 months. But if we look at from where house prices flatlined, which was February 2008, because while it's slightly down, it's down by like 0.01%. If you look at the meaningful downturn, we're only talking about 10 months. So it's interesting that the 2008 downturn was sharp, but it was quick. It was only down in 8 months. We're already 9 months through our downturn, so we're already longer than that 2008 downturn. But the interesting thing as well is that this one has been extraordinarily sharp. So house prices peaked in November 2021, and then they've fallen away really, really quickly. There wasn't any period of stagnation, which is different from the last one that we had.
Now, I think one of the biggest concerns or questions for people who are investing or buying in this market is, how long's the recovery?
So when we're talking about recovery, we're talking about from the bottom of the market where property prices were at their lowest, and then how long did it take for prices to get back to where they were in the peak? If we say that house prices peaked in June 2007, it took about 3 years and 9 months from the bottom of the market, December 2008, till we get back to where they were at their peak, which was about September 2012. So 3 years, 9 months. Though what is interesting is there was another small, I'd call it mini downturn, after prices started to recover from the end of 2008 through to mid 2009, end of 2009. Once we got into 2010, we saw prices dip by about 2.6% again before recovering pretty strongly. So even as prices start to recover, my point here is that you may still have some smaller dips after that and then move into some recovery. Now, I haven't actually compared that to 2022. Well, it's hard to say for this downturn, right, about how long is it going to take to recover because we haven't gone through it yet. But if we look at the Reserve Bank data, they'll say that after property prices bottom out, 2 years later, they expect that they'll be up another 11%. Eyeballing their data, I think it's going to be pretty similar, about 3 to 4 years before we reach the peaks that we saw in November 2021.
So the growth over the next 2 years that they're predicting?
Is about 11%, about 5% a year compounding.
Okay, so if we are right about our predictions of kind of early to mid next year being the bottom of the market, there could be 5% growth potentially for the rest of that year?
Yeah, I'd certainly say that. It's interesting that the Reserve Bank is saying 11% from the bottom. And am I going to pull up the graph? No. Oh, yeah, well, for my friends on YouTube, I'm going to pull up the graph. So if we look at where they think the bottom of the market is, kind of mid to 2023, and then you go through to September 2025, yep, they're predicting about 11% increase and pretty smooth increase. Of course, this is just a technical projection, of course. They haven't read some magical tea leaves and decided that this is exactly what's going to happen, but there is certainly capacity there. And actually, at the main Property Investors Conference this year in Palmerston North, I remember Tony Alexander saying same sort of thing. He said there is the capacity for perhaps a 5% increase in 2023 as well.
And Ed, how much of a price increase was there before the last downturn?
Okay, this is the really important thing to look at, right? Because everything that happens in the property market in terms of prices depends on what happened beforehand.
And we always hear this word correction.
Yeah, so what I'm thinking about is we were talking about the Queenstown property market, I think, last week. And what we're seeing in Queenstown is that property prices have not dropped there as much as the rest of the country. And some listeners of the show were saying, well, does that mean that Queenstown's a good place to invest? And when we looked at the data, and you know what, Andrew, I'm going to pull it up again because this was such a good graph. And what we saw there was that the reason Queenstown hadn't fallen in value as much is because it simply hadn't increased as much over the prior couple of years. So for all of New Zealand, between early 2019 through to the peak of the market, property prices were up, 54% before they started coming back. Well, Queenstown was only up about 39%, only 39% over those couple of years. So the reason Queenstown wasn't coming down as much is that Queenstown never went up as much. And so that's why I wanted you to ask me about what happened earlier. So what's interesting, if we look at the 2008 data, you can see that the property market really started taking off early 2002. And there was a big run on property prices from 2002 to about 2007. They went up by 107%. So they more than doubled over those 5 years, 5 years, 5 months. There was an average of 14.4% per year.
Holy moly.
So it went up huge amount. Then it stabilized, then it started to come down, right? So it went up quite considerably. Now, if we look at our ones or our most recent pickup, property prices really started to increase early 2019 and then had this big bullish run up to November 2021. Now, it's interesting that property boom lasted 2 years and 10 months. So not as long as the one we saw prior to the 2008 crash, but also it wasn't as steep. So we actually only saw property prices increase 56%. And again, I say only 56% over that 2 and a bit years. Now, what's interesting, though, is that means the average annual growth was about 17%.
So a higher amount, but for a shorter period of time.
Yeah, but it's not that much higher. So 14.4% was in the run-up to the 2008 downturn. Before that, we saw prices going up by 14 and a bit percent per year. The most recent one was 17% a year. It's quick, don't get me wrong, it's astronomically quick, but it's not that much more than what we'd seen in the run-up to the 2008 downturn.
Does that mean that we might have a softer landing when we do have a landing?
But that's the interesting thing. We've seen property prices turn more sharply and we've seen property prices come down further than what we saw in 2008.
Or maybe it will correct faster? We don't know.
You might say, you could Chris,
speculate.
You could, as you have been for the last 19 years, you property speculator.
Yeah, so long as you speculate over 19 years, it's okay. Okay, so what's the main takeaway?
My main takeaway from this is that I don't think that the downturn is going to last as long as some people think it will. So I'll give you an example. I unfortunately read a lot of comments on TikTok, YouTube, and Instagram.
I thought we'd banned you from doing that.
I know, but when we put content out, I read comments. So when I see that the New Zealand Herald has posted a property-related story, I read the comments to see like, oh, what do normal people think? And there are people out there who think that property prices are going to drop another 30, 40, 50%.
I remember that from the last time. Everyone always said, oh, property prices are going to drop and they're going to be halved. We're all going to be homeless.
Homeless. How would that even make sense? Honestly,
Ask Joe Public.
you complain when property prices are high and say we're all going to be homeless. You complain when property prices are low and think we're all going to be homeless.
All right.
But my point here is that the last major downturn in the GFC, where the economy was in a much worse position, property prices fell just under 11%, and it really took, call it 10 months for property prices to fall before they started to turn. Here, we're seeing property prices already down by, I think I said, about 10, 11 months that we've seen them fall by. We've still got a little bit to go, but it's not going to last more than another 2 years, for instance. For people who are saying house prices are going to be low for the next 5, 10 years, and we're just going to see stagnation and we're going to fall by another 10%, you're off your head. That's not what we're going to see. I mean, show me.
With all due respect.
Well, I mean, you've got to look at, well, what's happened in the past and what's going to happen again in the future. And things always change. Yes, house prices are higher now. Debt to income ratios are higher. We've seen a credit crunch. But remember, back in 2008, we had banks falling over. Yeah. We had unemployment significantly higher. There was a lot worse economic fundamentals back then. Now, these days, we've got the Reserve Bank saying our financial system is incredibly robust and can weather this sort of downturn. So just before we wrap up, though, Andrew, give us a sense, because you were around in the property business back in 2008. How does this one feel compared to the last one from your on-the-ground experience?
Okay, definitely feels sharp, short and sharp. Absolutely, and the numbers would support that. I guess this time round, I've kind of come to expect these things just take a turn over the relatively short period of time in a long-term asset like property. So I'm not as concerned as I was the first time around, because that was quite scary the first time around. The first time that I was faced with having rental properties in a downturn market was pretty scary. This time around, I've said to our staff, our investors, this is just one of those things. You just got to weather the storm. No big deal.
And just to be clear, we're not saying, oh, it's all good, mate.
No.
Property price is going to go up another 50% over the next 4 years. No, that's not what we're saying. We're just trying to be realistic about what the shape of this downturn is going to look like. We are going to see property prices still fall a wee bit over the next coming months. And depending on which data you look at, some's going to look worse than others. The Rhines data is going to come out looking better earlier than some other data like CoreLogic, just because of how it's calculated. And so I think it's just important to be very realistic that, do you know what, we probably are in the end game of falling property prices. The last downturn lasted for 10 months. This one's lasted for about 11 months. We'll probably go out to maybe 16 months in total. That's what we're predicting in our forecasts.
But we're trying to be conservative as well.
Right, let's wrap it up there, but please don't forget to rate, review, and subscribe to the Property Academy podcast. It really does help us get the message out to more people. And hey, if you think it's a good time to invest in property and you're interested in growing your portfolio, might be time to come in for that portfolio planning session. Easy way to sign up for that. Whip out your phone, send us a text. Our number is 5522. Text us the word plan. We'll give you a buzz, see if it's the right fit for you. Thanks for listening to the Property Academy podcast. I'm your host, Edward Knight. I'm going to be back again tomorrow with even more daily strategies, tactics, and insights to help you get the most.